preparing to buy a home. So I talk to a lot of people who are excited about getting into a home, about purchasing a home, and they think they're ready. Some of them will say, oh, I got $20,000, I got $30,000, or I want to get in a home soon. The rate just went down 0.5%, but a lot of things haven't gone down as well. So there's a lot of things I want to talk about briefly. So with Unwind Financial, I help people with financial counseling and dealing with their debt, budgeting, debt management, savings, and different type of savings, right? So in this case, we're going to be talking about a home buying process. And then I also help people with insurance who needs insurance covered for their property. So whether it's umbrella with their home insurance, of course, high risk properties, high net worth properties, anywhere from $10 million or more, to covering premium auto, non-standard auto, and standard auto. I love helping people, and I love help mitigating risk and get people thinking and preparing about the different risks before they go into buying something, both financially, not putting themselves in a place where they're going to have financial challenges because they overextended themselves, but also being preventative because life brings things, right? We have different variables. Our economy is dealing with so much right now. Costs are up. So let's get started. So some of the things when people ask me, well, how much should I be spending on a home? Well, what I think you should be spending on a home and what I can afford versus what you can afford are two different things. So I always say have a goal in mind, really have a purpose, and be intentional about every part of the home buying process. And it's so important because I've been around people who will sell you on anything. Got to remember when you get into a home, you're really purchasing a mortgage. Unless you actually purchase that property outright, you have your own land that you receive from your family, friends. You can just purchase it. You are purchasing a mortgage, is what you're doing. And so that mortgage is what's used over time to pay off the loan to buy that property that's on the land that you don't necessarily own or control in most cases for most people. So, with that said, you got to really think about what is the true cost of buying a home, really being ready for a home, being in a home buying program. I've been in those before in the past. Years ago, I went to one. It was great, but the person I was talking to wasn't as helpful. She kind of just stuck to the numbers, but when I started asking questions outside the box, she couldn't answer them. It was just kind of, it was either yes or no. That's not how it works. If that's the case, many real estate agents I have met would have been in a home instead of renting when they sold for years. So when you're buying, getting ready to buy a home, you want to understand what's your budget. I mean, it sounds simple, but the budget is the foundation of so many things. You got to look at where you're at. You got to work with where you're at. You might want to get into something, but timing matters. Even now, a lot of people I would suggest don't just jump into a home because the rates went down. What does that even mean? One lender and the way they package their product is going to be different than another lender. The service might not be as great with another. And then two, you got to remember they sell the note all the time. On the market, there's derivatives. That's tied to the housing market. It's tied to student loans. It's tied to vehicles and so forth, retirement accounts, all of that. It's a much deeper thing than you think about. So when you're buying that home, you got to realize when you're making that purchase that your name is not on the title. You don't own that title specifically until what? You pay off that last dollar with all the interest that's been accumulated over the period of time in which you purchased that home. So you got to kind of think down the end and then work backwards. So, for example, if you've been renting and you're able to afford $1,500 and you say, okay, well, I looked at my budget. I have $1,500 to work with a month. I'm putting money away in savings. I have 30 grand. That sounds great, right? Well, what about your closing costs? Closing costs are going to be anywhere from 3 to 5%. It depends on the program you're in. And what I mean by that is there's down payment assistance programs. And they're not all equal and they're not available everywhere. So, and what I mean by that is just like there's different taxes and zip codes and different properties that are more expensive than others. Everybody knows about 90210. We used to watch that movie in high school and so forth. And even in college, some people did. But the whole point is where you put your dollars matters. What you can afford in your budget matters. Don't try and go and get something to impress somebody else or to say, okay, well, this is my dream. I've arrived. Well, if you think you've arrived and you find out you can't manage that 2 months, 3 months, 6 months later, as I've talked to a lot of people being in that situation because they had to get in a home, the agent said, well, this is the time to buy. Well, because that's the peak where the agent was going to make the most money. So if you don't have your goals in place for yourself and have certain standards in place and values for yourself, somebody else will have those goals and for you. And those goals might not line up in those values with yours. But who's going to be stuck with the buck? Once the transaction is done, you're on the hook. Everybody else got paid. The lender got paid, escrow officer got paid, the agent got paid, and there's a lot of great agents that I know out there. Wonderful people, very helpful. They'll go out of their way to help you. But you got to remember, they've done their job. Once they've done their job, they're done. But their job is not to necessarily sit down with you and go over your budget. If you have one that does that, that's amazing, but they don't have the time to do that. That's where I come in as Unwind Financial. What I do, I help people with preparing and making sure a realistic outlook. It's not that it's a no, but maybe not right now, as you may have heard. Sometimes you got to delay it by 6 months, 12 months, or even 24 months, sometimes 36 months, depending on situations that you might be going through currently. Some people dealing with divorce and they're talking about, do I get in a home? Well, Mike, it just depends on how much you're going to be able to get for that home. What expenses are you dividing up depending on the divorce and what you've dealt with? So those are all factors that are important before you make a move. So sometimes in those situations, a little more complicated when I sit down with people, it takes a little more thought and planning. And even talking to a tax representative, I'm not a tax representative. I don't give tax advice. I just give people considerations and things to think about, strategies to put in place, and do things logically based on where they're at, what they can know they can afford. So sometimes things take patience. So it's okay. Let's get into this. So what can you afford versus what you're willing to pay? Those are two different numbers. So you might be able to afford $2,500 max, but can you comfortably pay that? Or is that'll get you in and you have $200 left over after everything is said and done? Those are things you have to really be honest with yourself about, because you can always get more home later. Or maybe you have the right location and you can build out on that home. And that's something you can do later on. But right now, what can you afford and what can you manage? Okay. So focus on that. And what's your goal? Why do you want to get into a home? Where do you want to get into a home at? The location or stores close by? Logistically, you got to look at housing expenses. So when you're looking at that, with not just the housing expenses, excuse me, but with the transportation, location, all of that matters when people are building a home. All of that matters. And when you're buying a home, so whether you're having it built or whether you're purchasing, all of that matters. So anyway, um, you have to focus on those expenses and geographical location. How far is it from your work? If you have kids, that's a whole nother conversation. So the decisions you make in buying a home, where you buy a home, when you buy a home, how much home you can afford also determines on your family size, your income size, your debt load. So if you have a bit of debt, that's another thing that a lender's going to look at. You got to remember over the last 3 years in particular, they've really tightened things more in the last 2 years because of volatility of our economy. Because you got to understand banks and lenders, creditors, they're forecasting ahead. They have a whole team that's already forecasting ahead. And when they have to tighten things, they're going to tighten things to make sure they manage the risk very carefully, and they're going to monitor their underwriting requirements. There's two different underwriting requirements, if you will. There's the front end that everybody sees, and then there's a back end. Banks and lenders know how much risk they can take, and they track this every month, every week. The rates drop 5% tomorrow. That's going to be like a miracle, right? We're all going to be excited. That might be a great time for a lot more people to get into a home. But you still got to look at everything, the whole package. You got to look at fees. You got to look at early. If you pay off the home early, is there a penalty for paying it off early? Is there no penalty? That's going to be in your loan packet. Um, so look at your budget, what you can afford, and stick within that. Always give yourself some cushion, and then work towards having 3 to 6 months worth of emergency expenses if you can before you buy a home. I know sometimes it might feel more conducive to get into the home because it's cheaper, but depending on the zip code you're in, I've talked to a lot of people in Texas where I'm at, and one of the things I talked to them about is, hey, my property taxes went up, and it's not every zip code, but a lot of zip codes property taxes went up, and just that alone, they weren't able to manage the extra $200, $300, $400 a month in increases in some cases. Some of them, it was more. I've had people said their property taxes, depending on the property size they have and so forth, go up about $12,000 for the year. Some said 6,000, others said 3,000, 5,000. They couldn't afford the difference, even if it was $200, because they were already stretched and squeezed. And sometimes it had to do with the debt load they already had carried going into acquiring that mortgage. And once you're locked into that mortgage, that's it. So that's it, and that's what happened. And so from there, those are risks that you have to manage, and those are financial risks that increase if you weren't aware of certain things in the properties in which you're going, and the location, the zip code, um, and there are HOA dues. So if there's HOA dues, then you want to look at also how's that HOA managed. Having that money, I talked to some people. It's like a miracle. They have $250 a year for the HOA. It must be great in the location they're in. But then I've talked to some. They literally are paying $600 a month for HOA dues. So you really got to be aware of that. And then what does that cover? What are the requirements? What's the lifestyle? What are expectations in the neighborhood? The people are like. You have to look at that when you're moving into that place and in that neighborhood and around those people. You're purchasing everything. It's just like when you get married, you're taking on those family members as well into the marriage. You're being engrafted in on both parties, right? And the two that are getting married become one, husband and wife and their family. So same thing. You're taking on a whole lot more responsibility. You're going to have to maintain the yard. Are you going to pay for that? Can you afford to have someone come in and maintenance the yard for you? Or if you have HOA dues or you're part of a community where covenants and there's certain things already covered, right? It might be so if it's a modular home or modular community, or those who even are in a stationary have RVs and they're in a particular community, still going to have certain things they have to abide by, right? So you have to look at all of those factors. So then also, um, so going back to purchasing, what you can afford, being realistic with yourself about it, and I always suggest going on the lower end because you have cushion. If there's an emergency, something comes up, you have to maneuver and make adjustments. You'll have that 400 or $500 or $1,000, whatever cushion you need to make adjustments. Two, knowing what your credit score is as well. That's another thing. Knowing what your credit scores are, not just one. People will tell me, "Oh, my credit score is 720 or 640." That's fine, but which credit score? Experian, TransUnion, Equifax. That's important to know. And I always suggest doing it 3 to 6 months before. Why? Because you want to have some bandwidth if you need to make adjustments and going into the home in the home buying process. When they pull your credit, it's going to be a hard pull. That's normal. It dings your credit a little bit. Don't worry about that. But you also want to make sure you're within a certain range based on what you're trying to do and what you can afford and getting into that property. You want to make sure everything is well packaged. So knowing what your credit scores are, because if you need to dispute something or have an error corrected, you don't want to do that in the middle of the home buying process, especially if they pull something up at the end and you were working on it, then that can be a flag. And guess what? Sometimes paperwork has to be rewritten. You do not want to have paperwork rewritten on the title or the note um, or the TILA, anything like that, because they're going to change the rate. They got to change the amount. If the rate changes during that time, that would be just a terrible situation, right? The rates went up and now they got to refactor that in. You already had your credit dinged once. And then you have something that still hasn't settled and updated on your credit report. So always make sure that's clean, updated the way it needs to be. Um, the other thing is you want to also make sure you have, like I said, closing costs. Closing costs are going to be between 3 and 5%. But also, if there's a down payment assistance program, going back to that earlier, you want to make sure you know what programs are available to you based on where you're at with your credit scores. There's some great programs, but they're not all equal. They're not on all locations. When I was in California, there was a program that I had looked at one time, and I remember I it was in Southern California. It was like a grant for about $25,000, but it was only certain locations in Orange County in certain cities. It wasn't in Sacramento. I thought, well, surely something like this would be in the city, in the capital of California. Well, it was not. In fact, they had a couple programs that were ceasing as far as offering any grants or any assistance at that moment. And so there's always things that are going to be different. So you got to understand what's available to you as far as resources, assistance, and even possible grants um, in that specific location. That's going to be important. Don't discount that. Look at every opportunity you have to take advantage of. So I know Bank of America had some programs in Chicago and I believe New York and California and some other states that they were doing to help more underserved communities, which is a great opportunity for them to get in a home. But again, don't just jump into a home. You want to understand everything. You want to make sure the neighborhood's right for you. And then also down payment, so 20%. So a lot of people, if they have the down payment, then you don't have to worry about paying the mortgage insurance, which can be in excess of $300-400 or more. depending on the size of your property and so forth. That's a lot of money with interest attacked onto it over time, especially if you have a 30-year mortgage. The other thing is, can you afford to pay early in some cases? That's a great opportunity to pay down your mortgage faster once you get into the home. That's another thing to consider as well. So if you have enough money on the checks you're making where you can pay 10, 15 days early, you're going to save a lot of money on the interest that they charge every day. And you'll look in your note when you're doing the notarizations. I'm a notary, but you'll look in your note and you'll see that in the note. They'll break down everything you need to know in that note for that loan, okay? Another thing you're going to look at as well is insurance. This is a big one. Again, I talk about insurance, right? Don't just get insurance just to get in the home. You want to get insurance to make sure it's the right for what you need in the location, the environment, what's the weather like. Because again, you could be very busy. You might have multiple properties. So whether you're buying it as an investment property, as a second home, maybe you go between two different states. Some people go between California and Texas, or they go up between Texas and another state. Regardless, you want to understand the insurance isn't going to be equal from one location to another necessarily. So you want to make sure you have the right insurance protections in place, and you can afford that insurance as well, because the cost is not just the $1,500 or $2,000 or $3,000, or some people I've talked to $6,000 a month they're paying or more for a mortgage. That's fine as long as you can afford it, but you need to factor in all the costs. And one of those is maintaining a home. Another thing I also suggest is having money set aside in a separate account. That's a housing fund account. That's going to be so important as well. I know I'm giving you a lot of details, but these are just some things to think about. But if you want to learn more about what I do and how I help people in these situations, even just doing insurance reviews, again, there's people who need flood insurance. I've talked to people, and sometimes, getting it versus not getting it makes all the difference when opportunities come and situations come, right? We have stuff going on in North Carolina, even from where I was at in college at Hickory, North Carolina, right down the road. Just talked to a lady from Lenore. Their lights just came back on from Friday to last night. She said the lights came back on. Asheville, they realized stuff was going on affected there with the weather patterns. Somewhere in Asheville, even just trips being canceled for the kids, not going for safety reasons. There's a lot happening right now all over. As we know over the years, about 2 inches a year approximately, it's been for the last couple of decades, 3 decades, that the ocean has slowly been climbing up and rising on the shores of California. Or you could put it another way, in geological terms, it's been eroding based on the weather patterns and the water over time and instability of the land and land tilts. And when things tilt and the weather and the soil not being stable, and of course the earth is moving all the time in California. In some places where homes are built, they're not very stable. There's a lot of there's companies that I work with that can cover a lot of different risk, but your cost is going to be different. And like I've said in the video before, I'm not going to be the cheapest. I'm not going to be the most expensive, but I'm going to do my best to do what's right for you. I do everything from a one-on-one consultative approach that's customized to your specific situation. So to learn more about me, my name is John Savage, owner of Unwind Financial Insurance Services and Unwind Financial Consulting Services. You can go to unwindfinancial.org if you need help with budgeting and financial counseling, preparing and taking steps to get into a home and what that's going to realistically look like, as well as in looking at your debt, because you want to eliminate that, but also insurance. So go to the insurance website to learn more, fill out an application to get a quote, submit your documents, all that's set up already. You can also inquiry, send me an email. So that's U, that's for unwind, and that's W for the wine, and that's F for financial. So UWF insurance.com. That's UWF insurance.com. To learn more about me, go to those websites, insurance quote, insurance review. Then I'm here, I'm available. I look forward to working with you. Thank you so much. Until then, unwind and have a blessed day.